What's up, traders? Anthony Crudele here, and thank you for tuning into this live stream of the Futures Radio Show podcast. If you're watching on Twitter, we're now live streaming on Twitter. I know that Periscope is gone, but we're now live streaming on Twitter. Give us a like and give us a retweet so we can get more people in here to chat with Julia and I. And if you're on YouTube, hit that like button. We have an awesome guest for you today. She's been on the podcast before. I love her Twitter stream and her YouTube channel. Her name is Julia Cordova. She's Cordova Trades on Twitter, and her YouTube channel is just awesome. She does a weekly review. It's free, and it's fun, it's entertaining, it's educational, and she's really a great technician. And the more I watch Julia, the more I really get to like her and her style of trading. And we're going to talk about her style of trading today. We're going to go to the charts. We're going to talk about trader lifestyle. We're going to talk about what indicators she uses. We're going to talk about execution. And at the end of the show, if you're watching this on the live stream, we're going to be taking questions on YouTube. So make sure you go to the YouTube channel. The link should be out there. If you're watching this on Twitter, to go and join us on YouTube. But before we get Julia live on the show, I want to remind all of you about micro treasury futures. I've been watching them. We've all seen this uptick in yields lately. They are live now as a futures product. I'm actively looking at the charts, maybe even see what Julia thinks about the charts today. But I think you should pull up these symbols just so you know what the yields are trading. 2YY, 5YY, 10Y, and 30Y. And if you want to learn more about micro treasury futures, go to cmegroup.com. Futures Radio Show is sponsored by CME Group, Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 future symbol RTY and micro E-Mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please go to FTSERussell.com. Let's pull Julia into the live stream. Julia, what's up?
Hi, everybody.
So first off, look, I was going through your tweets to see some of the things that we were going to talk about today. And happy belated birthday. Your birthday was yesterday.
Thank you. Yes.
Yeah. So what did you do? Anything fun?
No, but I mean, it was good.
Nothing. Are you not a birthday person? I'm kind of a birthday person. I like to do fun stuff for my birthday.
You know what? I am a birthday person, but this one was pretty low key. This one was just kind of chillaxing. I had a public sheet cake, which was awesome.
What is it? A public sheep cake? I don't know what that is.
You know Publix, right?
Oh, a Publix sheet cake.
Publix
Gotcha.
Sheet cake. It's my favorite since when I was 6. And what I do is I eat birthday cake pretty much 3 times a day. The cake. So I'm all sugared up right now.
All juiced and jacked up. All right, cool. Well, today we're going to get to the charts later and we're going to do some Q&A. But the first part I want to really talk about is just your process. I've been following you for a while. I remember when we had you on the podcast, I think it was probably a couple of years ago. I've just seen you evolve more and more as a technician. And I'm assuming, obviously, as a trader. And I just really love your work. And I want to really see where you are right now as a trader. I mean, we talk about trading as a journey and as oneself. I say that a lot. It's actually in my Twitter profile. Where are you in your journey? Are you short-term trading, medium-term, swing? Tell us a little bit about how your process as a trader is.
Well, I do. I try to do all things. So I am a swing trader in my investment account. And then I am sort of more of a scalper, sometimes a swing trader in my futures account. So I sort of do both things. I try anyway.
Yeah. So obviously it comes down to market and conditions for that, right?
Yes. I mean, certainly it's, futures are so high leverage. It's easier to do when you have a clear identified trend and you're everything is less choppy, so to speak, than it is exactly right now. But yeah.
So you think on the future side, you're definitely more of the scalper, just intraday stuff. You're not carrying stuff as much overnight.
Well, I say that, but I just stay up all night if I.
Got it. So you will hold them.
Yeah. I was holding gold futures all night, and then I was pretty unhappy this morning when it just started pooping. But yeah, so I was attempting a large swing there. I still am. At this time, I think.
So we'll get into that when we look at the charts later. We'll see what you thought about gold, and then we'll talk a little bit about your execution. I have multiple trading accounts too. and I don't think enough people do this. I think a lot of people try to really just open up one trading account with whatever broker they're at, and they basically just trade both types of strategies. Because a lot of us are like what you do. I'm a scalper intraday when the situations present themselves. I like to swing trade. I trade crypto, I trade stocks, so I have multiple accounts, and I think that is such an important part of me being able to really balance my ideas and just my strategies in general. Do you recommend that? I mean, how did you get to the point where you started to say like having these separate accounts?
Well, I mean, because I think I was sort of forced into it in a way, just because my IRA doesn't allow any kind of futures or options or anything like
Got
that.
it.
So I just try to play the bigger trends in my investment account, and then for the futures, I just try to play the high probability swings
Yeah.
and scalps. Yeah.
Well, obviously, yeah. I mean, yeah, a lot of traders, if you have a equities account or if you got a futures account, they got to be in separate accounts anyway.
Right.
But even for like styles, for me, actually, I have multiple futures accounts for a couple of reasons. Obviously, I think if one goes down, I want to be able to go to another one to be able to get out of it. I learned my lesson. I had a situation. I don't know. Maybe some people know about the MF Global, but I had money in MF Global at the time. I woke up one day, all of a sudden, I couldn't trade and couldn't get out of positions. Not going to go there about that, but I've learned it's important to have multiple trading accounts, and also just to be able to have like the swing versus the scalp. So this way you can see your different track records. I mean, do you look at that as well?
I do. And so, what's interesting, sometimes I do hedge within one account with the micros. If I'm doing something and I think I just need to pause, I'll hedge with the micros. Do you ever do that? Like take an opposite position for.
Meaning that, like, so basically, let's just say that you have like a Nasdaq position on in one account, and then you're looking at it going, you know what? I might want to lay some off here. And then on the other account, you let's just say you were long Nasdaq, maybe you short some micros to kind of like trim it, but still carry the big position because it hasn't gotten stopped out yet.
Exactly. You can even do it in the same account. At least they allow me to do it. I don't know if you're on.
Oh yeah, you could do that in the same account. Sure. I mean, because it's fungible in that respect, because it's really you're taking. I think this is one of the beauties. I'm glad you mentioned this. This is one of the beauties of using the micros. I mean, for me, I almost only exclusively use Nasdaq micros now, only. And my reason is because it moves so much that when I'm scaling in and scaling out, the bigger Nasdaq, I was too price sensitive. So I move only into the micros. I don't use the micros for the S&P, but I use them for the Nasdaq.
That makes sense.
Which do you use when you're trading them? How are you determining? Is it just your stop risk, or are you using only the bigger ones, the bigs or the E-Mini now, or the micros?
Well, it depends on my confidence level, and that's pretty much it. So, I mean, it really just depends on how confident I am in something and whether or not my plan is to scale in. Usually my plan is to scale in because the kind of trader I am is a little bit like, I don't want to say knife catching, but it's a little bit like, I don't know. I buy support and I sell resistance. So usually I try to scale in, though, if I'm unsure whether or not the support will hold or resistance will, whatever.
So you like to scale in. You're not in all at once almost ever, or are you sometimes in all at once?
I mean, for what I would consider a scalp, I go in all at once.
Got it.
But just for like normal trading, I do try to scale in. If scalps, I take if I feel they're very high confidence.
Got it. So do you get in all at once? Let's just say it's a hypothetical scalp, right? And it gets to the level, you have a predetermined level, right? So your entry, you already know what it is. Once it gets there, do you just get in?
Yeah. Otherwise I go deer in headlights and I wait until it's already either bounced or whatever. And then I go in and then it goes down every time. So, you know what I mean? So I just have to.
Got it. So for the swing positions, are you ever all the way in all at once, or is it a planned scale?
Usually it's a planned scale. I mean, usually it's, buy at whatever level, and then when it goes down, by the next third, and if it then goes up and then back test by the last third.
Yeah. Got it. And does that really come down to the setup? Do you like have an A setup, a B setup, a C setup, something like that? Or is every setup pretty much like that's what it is?
I don't know what you mean.
A setup. So like for me, I look at like, I was kind of talking about this a little bit lately on Twitter and in some of the shows where when I see divergence in the indices, like the Russell's up and the Nasdaq's down, or the indices are not working together.
Yeah.
For me, that will always classify as a smaller trade. So I would consider that. I don't really say it to myself as a B setup, but as a setup to where I look at the environment and say, I really just want to be smaller here, and I don't want to be taking on a full position. But if it's a day where I see, let's just say you were talking about gold, and maybe silver had a similar setup or something else really confirmed it, then I would just be more aggressive. That'd be like an A.
Oh, that makes a lot of sense because of the amount that silver was down today. One would think I would have taken this other gold scalp a little bit lighter. I wish we'd had this talk before. No, but yeah, that makes sense. That isn't necessarily what I do. I really just do it on confidence level based on that particular chart. But I like that. I like that a lot.
For me, I just felt that it works better for me, and I love the way you look at the market and the way that you are as a technician. And I wouldn't say I'm really a technician. I have a strategy that I look at technicals, but I wouldn't consider myself, as good of a technician as someone like you, who you're doing really good researching. You're seeing a lot of different things, and you really put together, I think, a really good, simple trading plan. But I've seen it over time and I've seen the effectiveness of it.
Yeah.
And what I like for me, because I kind of look at only a couple of things, I like to see the correlation markets, or I like to look at the environment as almost as a whole. When you're looking at all of your stuff, do you like sometimes get a sense and a feel of saying, you know what, look at everything right now is coming to support, or everything right now is getting weak? Does that trigger any sort of different thoughts in your mind about your execution?
Yeah, it does. So this week when I was looking at charts, I sort of have an idea that for what I thought was going to happen to pan out, it sort of needs everything to sort of come in line. So in this particular situation for this week, I thought, oh, I think I'm going to be right about everything or wrong about everything. I mean,
I heard you say that at the beginning. It was pretty funny.
Yeah. Well, it's true. And so I was sort of looking for one thing to go out of whack and give me an early clue as to the fact that I might be wrong about everything. And I mean, I could be wrong about just some things, but I do watch everything at once. Each of my charts that I share is sort of individual, but during the day, I only have one monitor in this office. So I'm usually just looking at my Thinkorswim screen, and I have everything up at once, and I have my levels marked off on all the charts. And so I'm just sort of watching for anything to go out of whack so that I can adjust something else.
Yeah, it's funny you say you only have one screen. I mean, that's all I have too. I have one big screen. I feel like the more I get into this business, as many years as I've been doing it, just the less I need to see. It's all done in my prep. I know what I'm looking for. I don't need to see 30 different markets. I'm not trading 30 different markets.
Yeah, you know what? When I was a new trader, I thought I was hot doo-doo because I had like 3 huge monitors, and you'd walk into my office and it looked really like, wow, she knows what she's doing. I had no idea
It's
what
funny,
I was
right?
doing. And it was like the more things I was looking at, the less I knew what I was doing too. Like it was bad. But yeah, no, I mean, and when I moved, I just set up the one monitor, and then I was like, oh, I'm actually doing better, not being distracted by everything, just sort of having one. I mean, sometimes I use my iPad as a separate thing, which I should be doing now to watch the market. But most of the time I just use this one big monitor, and I'm happy with it too. It's not distracting.
Yeah, I mean, I have a laptop next to me that I use for like social media and stuff. I'll look at it. Definitely, I have that, but I really have one trading screen, like one overall chart screen.
Yeah.
We're going to get to questions later, but somebody asked a really good question. I think it's just appropriate to kind of ask it right now. And they're saying, Julia, what was it like going from a part-time trader to a full-time trader? Like, how did you get to that point?
Oh, well, I was really lucky because I just sort of jumped in full time all at once because I had done pretty well in my previous jobs. So I was lucky that way. But I'm not sure I would have done it that way to begin with because it's a lot of pressure. So I think the first thing I would have wanted to do is have a track record of at least 6 months of profitability before I jumped in, because I bled money for, a couple of years. I did. So I wish I had, and when you're bleeding money, you sort of get more desperate and do dumber and dumber things, because then you think, well, yeah, I'm just going to now I'm going to put it all on red or black or whatever. Yeah. So the more desperate you are, the worse you trade. And, people, so this is the thing that, this is one of the reasons I don't share my P&L, but I had a huge trading account to begin with. I mean, I don't want to say exactly, it was huge. And the reality is I could have shown amazing numbers on some days, but on the other days, it was really horrible. And I know some people I was kind of chatting with online at the time were like, you need to start smaller. And I was like, no, I don't. I'm smart. I can just, I'll just start big and I'll figure this out. And I wish I had listened to that. I wish I had not just thought to myself, no, I can do this. I mean, it's important to have self-confidence, but it's more important to have a track record and to be responsible. So I think it would have helped me to have a stream of income while I was learning, because, at some point then I had lost so much that I was just like, all right, well, now I don't care. And as soon as I started not caring, then it came together. So
it's weird how that is, isn't it?
Yeah.
I talked about this. I can't remember with who. And I was saying, I think it was with Jared Tendler, I think, as we were talking about mindset. And I said to him, why is it that I was such a good risk manager when I first put my money in my account? And then every time my account would get near zero, I would just blow it up. And all of a sudden I'm just like, I mean, it was like a cry for help going, just get me out of this. I can't take it anymore.
I know.
And why do you think that we do that? I mean, we'll talk a little trader psychology here. Why do you think that happens? And it happens a lot. And if you're out there listening to this, this has probably happened to you.
Yeah, the lower your account goes, the worse trades you take. You take totally. The really high risk, low probability of winning. It's like that's exactly the opposite of what probably you should be doing if you think about it. But yeah, you're super. I don't know why. I don't know, but it's not even for me. It's like once I figured out I was doing that, I was like, oh, I suck more now than before. So. But yeah, then when I got to a point, I'm like, well, now I don't care. Now I've screwed myself for years. I might have to, whatever, go back to work and whatever. Then I was doing much better.
What's interesting to me too, because I don't understand why people have this mindset to where, I mean, you went to full-time trading right away because you had enough capital in your accounts to survive. Okay, yeah. That's one thing. Yeah. But I look at it and say, why do people struggle with the fact that you need to work while you trade? Why is that such a bad thing? I mean, I feel like so many people should be doing that. Way more people should be doing that. I was a member of the exchange on the trading floor, working for other traders, totally humbled by the fact that I could barely afford to get there, but I was a member and I had a trading account. And it's like, if I don't do that, I don't exist. It's like people don't get that you have to exist for some time. Well, it just drives me crazy.
Yeah. Well, what else is too, when I had the 3 screens and I thought I was like a player from television or something. No, but I couldn't take my eyes off of it. Like I couldn't go to the bathroom. You know what I mean? Like I was just addicted to it. And the problem is when you're watching every tick and you don't have a plan. I mean, when you have a plan, you don't need to watch all of the charts as carefully and it wouldn't, and so that was it too. I mean, I think when because I have a smaller screen, I'm sort of forced to sort of just know ahead of time if something happens what I'm going to do, so that I don't get deer in headlights by watching every tick and freaking out about it.
You put a ton of emphasis on preparation.
Yeah, and that's pretty much why I do the videos, because it forces me. It really does force me to be more responsible and to know ahead of time what I think. And if I say it out loud, it makes me accountable.
Yes.
So, a lot of times I have notes and I have labeled my lines long before I share them. But if I share them, I just find that it makes me more responsible. And also, you know, sometimes I'll take trades that I don't share on Twitter that are just awful. And I'm like, geez, I should only take the ones that I share because I was really high confidence in that. But I just kind of was like, oh, I'll just do this other thing. And then it doesn't work out as well. So that's sort of a reason, you know, it's difficult in a way because people do love to troll you, especially if you get popular for whatever reason. But yeah, no, I just do it mostly for accountability for myself.
Oh, totally. I mean, when I say things on the show, when I do put things out there, you do feel obligated, right, to follow through with what you said, right? I mean,
Yeah.
because you're saying it, and you and I, we're good people. We don't want to say something that we don't mean. And I think that's
Yeah.
really, you know, a big thing is what drew me to you. And I think that your popularity has grown is because you're just honest. And, you know, when you say it like it is. I mean, that's why I was cracking up the other day when you said I might be right on everything here. I could be wrong on everything. I mean, when somebody's watching somebody else's analysis, Julia, that's the reality, right? I mean, and you always make that clear. You're like, look, you have that not financial advice behind you. You're like, look, this is my work. This is what I'm looking at.
Yeah. I mean, you know, I like to have confidence in myself, but the reality is, you know, I know too, when I got desperate, I would go to people who I thought knew what they were doing. And I would, again, just go all in on whatever trade I saw them make at the moment. And what do you know? That was their awful freaking trade.
It's amazing.
I was like, wow, not only can I make poor decisions myself, I can also choose when this one person who's really good makes a poor decision. I'm great.
I know I could pick them better than anybody,
Oh
right?
boy.
It's incredible.
So I'm cognizant of people doing that. And then that's generally, I think, when you get the most, I mean, sometimes when people just disagree with you, but you to get the most trolls, I think, when somebody took that one trade, they didn't have any risk management, they didn't have any plan, and that's the one that didn't work out. And they're like, rah, 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 rah. You know, and it's like, well, did you take the 18 others that were great?
Oh yeah. Oh yeah. People love calling you out for the losers, right?
Yeah, right. I know.
And the thing is, we both know we're wrong all the time. That's part of this.
Of course.
I mean,
yes, the key is knowing when you're wrong. That's it.
exactly. And there's a couple questions coming up that I think are, once again, I'm going to do mostly the Q&A at the end. Everybody, when we get to the charts, we'll let you guys ask Julia what markets you want her to chart for you guys, and we'll take a look at that. But I think this is important to talk about before we go to the charts, Julia. And I'll put this question up here right now. It's from Mish. Can you explain your T&A style? Any T&A books you recommend? You know, maybe books that you read before you started?
Yeah. So my particular TA style is technical analysis style is channels based. So what I try to do is I try to find slopes of lines that I can move around the chart and that still look good. So if it's above, good. If it's below, bad. And so I try to find several different slopes depending on how much momentum something has going on at the moment. And then I try to pair those with similar lines that I create using RSI, which is the relative strength indicator. And that sort of, for me, when something is at both support of, you know, that one indicator and price, or as if it's at resistance of both of those things, then that's a higher probability trade than something that is, you know, at one but not the other. So that's why, I mean, people also say, you know, I mean, I don't really. So also when I share my charts, I don't pretty them up for public consumption. I mean, I know probably I could be a lot, excuse me, more popular if I just if I made them like, you know, two lines and like, but that's just, I don't want to take the time to do that because I don't sell anything, and I want to keep my charts the way that I look at them. And also I just try to label which ones are important. But in general, my TA style is something called channel trading. And I just try to play the slopes that algos respect. Because for me, computers move the market, and they're much more sensitive to slopes than humans are. Humans are looking at sometimes fib levels and sometimes, you know, other things, but the computers look at all that too. But I'm just saying, I think that I just try to be like a pilot fish on the big money and just try to figure out what they're looking at, and then go along with them. And as far as books go, I do have a book by Bulkowski about patterns and how likely something is to happen and how not to happen, and shapes and things like that. But if I opened it right now, it'd go like. I don't think I've never opened it, because he has a website too, but I just wanted to support him, because when I started looking at his website, it can't be from the 80s, but it looks like it's from the 80s. Like it's bad, but it's such a good content website. I think it's called the chart site, or chart pattern site. I can't remember what it's called. I can share it on Twitter or something when I find it, but it's such a good website for information that I bought the book just to support him. So anyway, that I like his stuff. And so and also I did mentor someone, and the first thing I had them do was sort of memorize candlestick patterns, just very generally, just not to necessarily use them as your main trading tool, but just to sort of know in your mind, if you see candlestick patterns in addition to whatever support and resistances you're looking at, that's added information for you. So that's pretty much the extent of my book learning.
A couple of things I wrote down that you talked about, I think, are extremely important. You mentioned just learn the basics first. I mean, trading is a language. Understand even what a candlestick is. Look at the basic patterns. Yes. I know a lot of people put that stuff out there, and although you may not trade off of those patterns, when you come into our world, right, the world of trading, I think it's important to understand the things that people are talking about, because otherwise you're just going to be driven in all sorts of directions with actually no direction, right? And then the other thing that I thought was very interesting, and I want to talk about that next, is that you chose channels, and I'm putting words in your mouth, but I want you to correct me if I'm right or if I'm wrong or whatever you think. It sounds to me as though you chose channels because you believe that the computers, which you believe drive the market, I think we all at this point know that they're the biggest traders out there now, that's where they're most sensitive to. So you feel that is somewhat of an edge of hopping on what you think they're seeing.
Yes, for me, 100%. I mean, I tried all sorts of different things. I tried a lot of different things. And then for the way that I trade and the way that I learn and just the way that I think, channels is the best strategy for me so far. I mean, I'm open to changing, who knows, but I don't want to screw anything up at this time. But for me, channels was the best thing, but somebody else might have a different approach. And so I think, that's why I like Twitter so much, because I can have an opinion, and I can go to you or to other traders that I respect and sort of just kind of figure out whether or not they see something similar. I mean, so yesterday, it looked to me, just from, the amount of time I've spent watching screens, it looked to me like ES was getting ready to reverse, but I didn't have any support on my daily chart. I had it for Nasdaq, but I went to Jay Strizzy and I was like, Jay, do you see anything here? Because I think it's going to turn around, but I didn't have anything to sort of go on. But I like the idea of, I don't know what he does. He does some kind of magical thing. I'm not sure, but I just asked him if he had anything, and he just sort of said, yeah, this is general area to buy. And I'm like, well, I figured that out. But but I mean, it was good to have a second opinion and to know, to be able to rely on certain people that you know are good, that use different things. I like channel traders a lot, but sometimes I want a different opinion from somebody else, an order flow person. Or do you use order flow at all?
When I'm scalping, I'll look at it. Definitely. I haven't scalped in some time now. The market's, maybe as of late, I've been starting to do a little bit stuff intraday, but I do when it's really short term. And I like it. I think it's a great tool for traders. I think market profile, order flow, if you're scalping, I like it. It's not something that I do a lot of anymore, but I do like it. And I want to actually continue to talk about something that I think is another thing that's important, right? Is that you and I will go to other traders and we'll see what they're thinking. You and I have no problem being wrong. And we also we're also confident in what we're doing. So when we go to other traders, we could take that feedback. And if it makes sense to us to implement something, we will. But I think new traders, this is where they struggle, right? I mean, because they're not on their 2 feet yet. And,
Right.
and some of them are scared to be wrong, or they, you know what I mean? I think this is also a mindset that they have. They're just looking for something they just want someone to tell them what to do and be right.
Yes. Oh, especially once you get desperate, it gets worse and worse. It just gets worse and worse. But yeah, I completely agree.
A lot of people are still putting in questions, and I know some people, if you guys are listening to this on the Twitter stream, like I said, this is the first time we're doing it. So Julia and I, you and I, the first time Twitter's actually allowed me to put this to where we could stream on Twitter. If you're watching on Twitter, I'm getting some things saying that, we put messages on Twitter. You got to come to YouTube to be able to ask us comments, because we're going to get to the charts here, and you're going to be able to ask Julia a bunch of questions, and we're going to take a look at her stuff. But I think I want to go to this one last question before we get to the charts here, Julia. So we'll do this, and then we'll go on a break. And this is from Playlist Marquex. I'm probably botching. I never get any of these names, or it's not a name, obviously. But questions for you both. Any advice on best strategy to transition from a part-time trader to a full-time trader, and the lessons learned?
Well, I think the first thing to do would be to figure out how much income you need to be able to survive. And then you need to be able to think that you're going to make more than that. Because, you have to set the bar very high. You almost need to think to yourself that you need to make, twice as much as you need to survive in order to really feel comfortable when you do transition. So I think the first thing to do would be figure out how much you need, and then plan to make twice that, be able to make twice that on a percentage basis. And then I think so for me, I mean, there could be, it's possible that you could have a month without making money. So you have to know how long you can survive if you don't make money. And basically, I think that you need to be able to show 6 months of profitability for whatever percent it is that you need to be able to survive. You don't have to actually get the double mark, but you need to get over what you think you will need. But at the same time, I mean, that's the thing. I mean, if you're starting with a smaller account and you need a lot of money to survive, it's sort of like you really don't want to do that, because again, then the trades you'll take are higher risk, and there's more of a chance that you'll sort of fall back from that. So you do, in my opinion, sort of need to build the account first while you're learning and before you transition to full time.
I think that's great advice. I think financially, you have to be in a position to do it, like Julia's talking about, and so far beyond what you think is just the basics. I mean, because I look at my career, and I would, at the beginning, I struggled, then I did well, and then I struggled again, and then it's just like, if you don't think that's going to happen, you're nuts, right? I mean, so you need to be so far beyond what you think you need. And I hate these people that say, hey, $500 a day is $10,000 a month. That's all you got to be able to do. Really, you got to try to make like $1,500 to $2,000 a day on your good days to be able to make $10,000 a month, because you've got so many other expenses that are tied to it. It's one of my biggest pet peeves. It drives me crazy. I lived it. I went in there every day, and I said, I'm going to make, this is in the 90s when I started, $250 a day to $500 a day. I'd be making $250 to $500 for the first 80% of the month. And then I'd have 2 or 3 losing days. I'd pay expenses. I'd pay whatever it costs. All of a sudden I've got nothing and my account's lower. So it just doesn't work that way. So I think what Julia said is just perfect. And the other thing I would say is go from a part-time trader to a full-time trader. What is the harm if you're having success? And this is something I think I really believe in. If you're working and you consider yourself a part-time trader, I think, first of all, you need to go to a longer-term time frame. And if you're making money, what's your hurry to get away from that, right? Slowly implement it to where you start to either stay on that same time frame, or you start to go to a little bit shorter time frame, like Julia and I talked about, swing and then maybe scalping. Experiment with it. But don't be in a rush. I mean, I know some part-time traders that make great money, and they're still working. And you look at it and go, why get away from that? I mean, everybody who's I want to be a trader full-time and do all that. It's there's a lot more that goes into it, right? I mean, this is than people think. It's like, oh, well, I have all this free time. you're spending more time at the screen than you ever thought. I mean, what do you think, Julia?
Yeah, I totally agree. It's a grind, and it's really hard, and it's why a lot of people do services. I think, I don't know, because it's nice. It's nice to have residual, some kind of reliable residual income, and unfortunately, trading isn't that. That's the last thing it is. It's I mean, I'm just being honest.
It's so true. We agree on this. It's why I like talking with you. It's so much fun.
That's why when you get to be a good enough trader, you're like, oh, okay, well, now I know what I'm doing. I can teach it to other people, but at the same time, then they get that residual income stream that you would have really benefited from at the beginning. Do you know what I mean? So it's I think that's why people do it. For me, I wouldn't do it because people are pain in the ass. I think, you know what I mean? And also, I just feel so bad. I'm already obsessive about my own stuff. I would get obsessive about other people's stuff, I think.
So we're going to take a break here in just a second, and we're going to let you go and get your charts ready and talk about stuff. So before we do that, tell us some of the things that we're going to be looking at in the charts. What markets are you eyeing right now so everybody can get geared up for what we're looking at?
Well, we're clearly looking at the main indices here. I don't know what's happened since we've been on air, but we were sort of in a chop fest this morning, and it was threatening to take me out of my long. It was trying to scare me. It didn't yet, but it hadn't as of when we went live. But so we'll look at the indices. We'll look at the precious metals. We'll look at oil, anything else anybody wants to look at. But those are just sort of the main things that I was watching today.
Oh, I'm going to be interested to see what you're seeing, in gold. I'm going to ask you to pull up S&P and Nasdaq as well, because I think it's getting pretty interesting here. I want to see what it looks like on your charts. Yeah. So while we've got Julia going to pull up her charts, everybody, I just put my link to Trading Instincts versus Trading Rules ebook. Feel free to go in there and download that. I just dropped the link in the YouTube chat. It's been 20 years since I wrote these instincts versus rules on my trading cards, and I put them to an ebook. So if you want to go and do that, and then Julia, let's just pull up your charts for everybody here, and then we'll start looking at some markets.
Get S&P 500 and Nasdaq 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-Mini options with TradeStation. Get a piece of the pie now.
I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. All right. We are back with Julia on the charts. Julia, what are we looking at?
We are looking at the weekly ES futures and the daily. And so it looks like today they are just trying to scare a bunch of people out who might have bought the effing dip yesterday. And we'll see whether or not they're successful. I did buy the dip yesterday, but I am not completely convinced that that this will potentially hold into the next couple of weeks. So I sort of bought the dip trepidatiously, and I'm waiting to see whether or not we approach this next level of support and then beyond that. So, I mean, I actually personally would love a freaking flush down here, because I think that would scare a lot of people. I think a lot of people are just like those baby birds, and the Fed is like feeding them, you know what I mean? And they're like, don't fight the Fed. And they don't even know what they're talking about, but they've been right, so it doesn't matter. But some kind of flush down to this 4183 area, and I think anywhere in here, I would absolutely love to go bonkers long here. But for now, I have a long going on from yesterday, and it looks like they're just trying to scare us out.
Yesterday I actually talked about this, tweeted last night. I looked at a lot of what I look at, and I like to look at Bollinger Bands. And when the mouths open on all of the indices and we're below some, either some medium to short term moving averages, I've been feeling like we could get some sort of capitulation move. I think it kind of, when I look at your stuff, I say, okay, what levels is she looking at? I mean, that's where if we do get a capitulation move, I would be a bottom feeder because, I mean, this is where I would, step in really small on the scale, have a hard stop to know where I would want. But when I look at the markets right now, that's really, I think, what a lot of traders are looking for, because it's so hard to buy it right in here that it just feels like it just feels like a bad low, right? Like this low is like, it's hard to lean on it. I look at it and go, I don't know. I'd like to see the washout. And then why I'd be a bottom feeder is because they spend no time on these lows, right, Julia? I mean, they're off the lows like that.
Yeah, exactly. And yeah, I mean, I agree. I did buy it just in case, but it certainly wasn't scary. I mean,
exactly, right?
And in fact, so Nasdaq, I mean,
yeah, this
is a little too cute for me. It bounced right off of the 20 MA, and it's too cute. Like, it's too cute. I mean, any normal new person would have bought that 20 MA because it's like, duh. So for me, it's just a little too cute. I wanted to get a little crazy. I wanted to scare some people. It's too cute right now. But you know what? If they're going to play cute, they can be cute. But I just think moves like this that are so basic and so predictable tend to get at least washed out a little bit, a day or two later in my experience.
When you say that they're a little too cute, do you think of it as like it's just too organized? It's just too perfect of a setup? Not perfect, but you know what I mean? Where you're just
yeah,
come on.
Yeah, right. I mean, I remember trading 101. If something is above the 20 MA, then it's bullish. And if it's below the 20 MA, then it's bearish. And so any backtest of the 20 MA is supposed to get bought by everyone, I think. So a lot of times they'll do an initial back test, and then, I mean, I don't know, it may hold, and great if it does, that's fabulous. Whatever. But usually what'll happen is it'll hold it first, and everybody's like, oh, okay, well, they're just trying to scare us, like I said, and then they scare us, and then you're like, ah. So yeah, I don't know if this will hold or not. I'm not counting on it holding, because I personally, I want it lower. Really, the Nasdaq has exploded so much that even if it goes, I mean, this is the channel, this is the daily.
Yeah, I mean, and the hardest thing about that is like when I look at that, I mean, I could go back several months and say I feel the same way, and it just keeps working. It's driving me great.
Right. But it's just sort of done this, and this is why I like channels. So it sort of broke out of that, and then it was like, nope, just kidding, and then failed this bull flag. And so, I mean, potentially it can go all the way down, below this blue support. And as long as it ekes back above, that's bullish. And this is all the way down. I mean, I don't know when it would hit. That's the hardest thing for me, telling people levels. I still don't know how other people do that, because like it changes every day.
Yeah, because it's trending.
Right. So it could go down to like 14, 100 or so, at 14,100, and still be super bullish longer term. And I hope that it does, because that will shake a lot of people out, and it will allow me to buy a lot of stuff.
So let's stay on this chart for a second, because I have a couple questions about it. Okay. I want to start with the three blue lines, we'll call them, that are the up channel. Where does this start? Where do you sit back and say, this is where I'm drawing this from?
Okay, so this one in particular, these in particular, I mean, really, I don't even know. Oh, see there, you can see where I found it initially, and then I just moved it around. So I was just looking for areas where it sort of came back from the brink and then back tested that area before it went up. So I was looking for flushes under and then a back test to go up. And that's sort of how I found that one in particular. I know a lot of, I don't know. I mean, I don't want to give away too much because my lines aren't normal, but I look for things that are, I don't know, I would say highly probable, but look how well it's done. Like, this is perfect. And then the same slope higher up. I mean, from here, didn't quite get there before, but it did again here, and then here as well. So that's, I mean, I sort of just, I look for not necessarily connecting the, the bottom of 2 or 3 wicks. That's great if that happens, but I look more for the behavior above and below the line than I do that it actually hits the line. And I remember too, when I was a new chartist and I would send my charts to somebody for feedback, they go, your charts are terrible. And I was like, why? And they're like, because, I mean, they might be, I don't know. I mean, that's their opinion. But then they're like, because the price goes through it and blah, blah, blah. And I was like, well, but everybody is doing the ones where it doesn't go through. And look how terrible they are. They're not profitable. They're just like making pretty charts. So I started to try and figure out the behavior rather than the actual, bounciness off of that particular thing. But it works super well. So I don't want to not do that anymore. So that's that's what I do. And then this pink slope is more of a early warning detection sign for. See, where did I get that? I got that one there. So it's sort of like early warning detection sign for, and I had to redo all my charts recently because investing.com got rid of all my lines. So anyway, that's pretty much what I look for to say, okay, if it's above here, that's a breakout, but then it needs to hold in this channel or else it's failed. And then, so forth and so on.
What's interesting to me about this is that this is the artist in you, I would say, of your strategy, right? This, where you're starting the lines, how you're looking at it.
Yes. And it is a lot of artistry. I mean, for me, I mean, I wish I had a computer that, an algo that could just trade everything for me. But for me, there is a lot of art. I mean, it's the same thing with human psychology and looking at Twitter to figure out whether or not, what the sentiment is. I do that a lot. I don't actually subscribe to any sentiment services or anything like that. I just try to gauge sentiment based on.
Same.
Yeah, I mean, and too, I can tell like a lot of people when a lot of people don't like my tweets and I think they're really good, then I'm like, oh, okay, well, that must mean that people disagree with me. So yay.
Trade it big.
yeah, that happens a lot. I was like, why are these other people like having terrible like I don't know, they're not terrible, but like they say something that I'm just like, that's stupid, and they get like a bajillion likes, and I have a good setup, and everybody's like, oh, golf clap for Julia. But yeah, and it's also true though, when I post charts, I get less likes, but I do it anyway because I don't care. I mean,
there's so much to that though, Julia, right? Is that if everybody likes it, that's a lot of information.
Yes, it is. It is. I get worried. Yeah. I mean, I don't do this other people, but like I do look at popular accounts and what they say and who says what to them more than I look at my own stuff, just because it's interesting to me. And I get a lot of information from it. And sometimes I do my position sizing based off of it.
Oh, interesting. And now let's go to the magenta lines that are the down slopes. Yeah. How did those start? And why do you draw those?
Well, it's really just to give me an early warning sign of a breakout. So like, in this instance, price, this is the daily price broke out above here, but didn't hold it. So for me, the sort of gotcha there would be holding above it and then being able to continue to hold it. So this would have been my sell signal, like, oops, just kidding, and then waited until it got above again and then used that as, see what I mean? Like I use that as a where did the line close? So this would have been a buy, right? And then when it closed below it, this would have been like, oops, I'm wrong. Potentially you could get rid of it on a back test if you thought there was going to be one, but that was a scary looking day with no bottom wick. But then you sort of wait till you get another close above, you try it again, and then it never closed below there again. So kaboom.
Oh, let me ask you this real quick. Why do you keep it? Do you look at it as a potential retest at some point, even though now
why do I keep it on there?
Yeah, I guess I'm just wondering why you keep that visually on there.
Well, in this case, I was just, because I had to redraw the lines, I was just moving it around. I was like, oh, look how great it did there. And I just want to remind myself of how great the line is so that when I think it's not great, so here, same thing, closed below, closed above. Okay, back to long, and then here it held it. So it's just so I can, and here it got above, back tested it, never closed below. It's just so that I can. It's important for me to have, sometimes I'll notice on a lot of my charts that there's only lines going in one direction, like silver right now, they're all going down. I'm like, well, I should put some up lines in there so I know when there's a trend change. You know what I mean? So that's, but I keep them on there because for me, I think of my charts as more like medical records where, particularly if I've traded the chart a lot, I can look back and see how accurate I was before. So it gives me either more confidence or more trepidation when I take the next trade.
No, I like that. What I want to do is I just want to spend a little bit more time on the education side. Then I want to go through a bunch of markets and we'll have you give some analysis because we got about 10 minutes left.
Okay.
Rob Besh is asking this question, and I think it's important because we talked about you as a swing trader, and we talked to you about how you would be an intraday scalper. So let's talk about the scalping side first. What are your preferred time frames for the scalp or those intraday trades?
So for me, I use the weekly to sort of gauge the general direction. If I'm trading with the trend, I'll use the weekly to gauge the general direction, and then the 4 hour for me is sort of my bread and butter. And so I look at the 4 hour quite a bit, and then I look at the 1 hour and 15 minutes for entry a lot of times. If I don't see a really obvious, whenever I see an all coming together of my hourly trend lines with my daily trend lines, for me, that's like super high confidence. So I use the 4 hour and then the 15 minute, but generally speaking, I like the weekly and the 4 hour the best.
Got it. No, so is it similar even for your swing positions? Does the time frames of your charts change?
Yeah, it actually, it is similar. It's really just based on whether or not I have high confidence in the trend either continuing or reversing. It is similar. And a lot of times my scalps will turn into swings. So I'll start them, in a futures account, and then I will open them in my other account and just know when I would have stopped out, and then keep the futures position as long as I can. And then I usually what I do try to do, because I like winning, is I try to take profit pretty quickly on a third of it. Well, it's
true. I know what you mean. Yeah, I feel the same way. I'm laughing because I do the same thing.
Yeah, so maybe I'm, not maximizing my profit, but then I have a really super high win percentage, because what I'll do is I'll take a third off pretty much at 5, depending on how risky the trade is, 3, 5, 10%. And then I'll take the next third off at resistance. And then I have FOMO. And I used to have a problem where I would take it off and it would take off a trade completely, and it would keep going up. And I know everybody says, don't even look back at it. Once you're off the trade, you're off the trade. I can't help it. And so what I would do is I would take the trade off. I would have a great trade, and then it would keep going up, and then I'd have FOMO, and I'd buy it again, and it would go straight down. So what I do is I keep a third on, even when it gets to resistance, because if it gets above resistance, I don't want to freak out and buy it before. I just don't want to do the wrong thing. So I just keep the 1/3 on.
This is the beauty of scaling.
Yeah.
This is why I can never be all in, all out on every single trade. I scale into everything, not all the time, but if there's something happening where you don't need to scale, or the market goes my way right away, I might keep a tight leash on it and just watch it run. And then maybe I'd wait till it gets to the target because it's just running there. Everything is going to be dependent on the situation. But Julia, I totally agree with you. It frees up your mind. It builds confidence. There's so many things that, if you're a button pusher like me, it sounds like you are as well, where it's like, this is the beauty of the micros. This is the beauty of scaling, being able to manage around your positions. I don't know why people feel like you have to get all in or all out. They want that gratification. For me, scaling it solves a lot of those issues. If people say holding winners longer, how many years I've been doing this, how many years you've been doing this, how many times have you got into a full position and held that full position to the furthest target?
None.
It just doesn't happen. You don't know what's going to get there. So if I don't know what's going to get there along the way, I have to put something in my pocket because I can't expect it to be perfect, right? I mean, it's the way it is.
Right. No, I 1000% agree. And plus it just psychologically makes you feel like, all right, well, let's say you took off a third at 5% and the rest of it went to break even. Then, you didn't make 5% on the whole thing, but you made something. You won the trade. And then the next time you can worry about the next setup whenever it happens. But it's, for me, it's like super peace of mind. And that's why I actually do have a really high hit rate, only because I'm not greedy and taking some off right away, because I like to say, yeah, I took a little bit, but then, didn't work out. Yeah.
Well, look at it this way. You just like you just said, you could be wrong in the overall position, but still make money because you took some off and you managed the trade better. I mean, people don't put enough time into trade management or trading around your position. There's a lot that goes into that. We're not going to get into that right now because it's, I think, a whole other conversation. Maybe we'll talk about that next time. But there's a few good questions about this because, like I said, I think we'll do kind of a rapid fire with you at the end. We've got about 5 minutes left, but I won't go through the markets. But I think I have a couple questions I think are important to understanding what you're looking at. And they're saying, what's your risk reward ratio? Because I think this kind of fits in. And like, what are you looking to get, on the returns or, versus your risk?
Well, ideally it's 3 times your risk, but it really does depend on my confidence level, but ideally it's 3 times what you risk.
And this question is, and I don't expect you to answer this, but I want to answer it, and I'm going to answer the way I feel about it too, because I get this almost in every show, and I don't think that traders should be coming on here. Some may choose to, but tell people how much they're trading or how big or what their risk is. I think that's a personal thing. But what is an average position size and the number of positions at a time? And I always look at this, for me, my position size is always dependent on the risk. So I could trade a lot of futures, I could trade a lot of stock, but my position size is going to be depending on how far that risk is. If that risk is wide, I'm trading smaller. I got no problem with that because that risk amount is what matters to me, right?
Yeah.
I don't know.
So I will say, so like I said, I mean, when I was a new trader, I could have, so it was not, I don't think, I see people posting some obnoxious numbers sometimes. I mean, great, good for them, but then they're not posting the amount that they actually lost in a couple days. And guess what? It's the same or more. So, but I will say that I am not the best multitasker in the world. So I do try to keep, at least in the futures, I'm usually 2 positions open at a time, sometimes 3. But I will rotate in and out of things all the time. Like if I'm trying to short something, I'll take and it's reached support, I'll take a scale off of that and I'll move it to something else. And then I'll put that something else when that something else gets to, support or resistance or whatever. So I'm constantly changing my allocation of those things. But yeah, usually 2 to 3 positions at a time in my futures account. And then in my other account, it's a little more, my investment account is a little more diversified. And I do even have a section that I don't look at, because if I look at, I will, click. Like, I really do respect people who were able to buy Bitcoin at whatever amount and have hodled it the whole time. I could not. There's not a way that I could do that. If I looked at it every day, I would constantly either want to take profit or be scared. Like, there's just not a way. So I do have a whole section that I do not look at. I mean, I see the balance, but I just try to hide it from my eyes. So.
Yeah, I think that's very similar for a lot of traders. I don't claim to be an investor, right? I mean, I know I'm an investor. That's a totally another job for me, right? My income comes from trading. My investing thought process and what I do for those is not the same things that I'm doing for trading. It's different. I invest in a bunch of different stuff. And when it comes to stocks or I don't really even consider my crypto stuff, especially at this point. I'm trading way too much crypto to consider it an investment. My investments, I'm not looking at those all the time. I don't want to be. I'm making my decisions based upon a much wider time frame that I don't want to be micromanaging them. And I don't even consider that I micromanage my trades, but I'm obviously looking at them all the time. It's just very different. I think that you have to have that head on And I struggle with this because as a trader in me, I'm going, geez, how I can't wait to cover my QQs or my Nasdaq, because I would have covered them at, 4,000 points ago or longer. So, it is very different. And then are you focused on a one main market or multiple? You said 2 to 3. I just wanted to, at a time in the futures. And then like you said, in the stocks, that's about what it is, right?
Yeah.
It'll be different. Okay. Let's start going through, let's rip through some markets because we're right here at the end. And what I'd like to do is let's start with the metals. Let's start with gold because everybody's wondering what you're thinking in gold, and we'll go from there.
Gosh, you know what? I had tried to buy the dip before when I got here, and I did pretty well there. And then I did take some off, but it's pooping again as we speak. And I mean, I think because you can't see it here, but there was a sort of a flash crash wick here that I would consider to be the head. But in all reality, it has to bounce somewhere. You can see the dotted red price line. It's at a support right now, but it has to bounce soon, or this is sort of off the table, and it's going to potentially, I hate to say, I mean, I can try to figure out whether I can find some interim supports, but it has to either bounce here, around here, or else it's going down. It's probably going to go down more than a lot of people are very comfortable with. So,
that was that Sunday night open on that right in gold when it ripped down there, and the fact that it's getting back into that time frame.
For me, it's got to stay above this area, or you know what? Sometimes I'll take something off and then I'll just put in a buy stop. So if it gets back above here, then it just gets automatically bought, and then I don't suffer from like continually trying to cut myself. Like I don't mind cutting myself once or twice and taking a loss, but I have the kind of personality that, after I do it twice, I can't allow myself to do it anymore because I'll continue to do it. So I just put in a buy stop and I'm done.
Yeah, that's a mistake I think a lot of people make, is that they'll just keep doing it. Well, this is it, and just putting that buy stop in there mentally, at least you say, if this does happen, I will be in it. And in the meantime, I'll miss it. I mean, you just got to commit to that. Yeah, it's tough, but it's a good thing to do. Let's go to silver.
Okie dokie. Oh, it's probably worse. Yeah, it's worse. Okay, so
ugly.
Yeah, it's ugly. See what I mean? All the trend lines are going down.
Yeah.
I noticed that this morning. I was like, well, I've been trying to, buy these flags, and I've been trying to, play these patterns, but for now everything's going down. So really, before it gets down to this black line, and it looks like it's headed that way, there's support at for this 4 hour. If it can't get back above 21.64, there's some support at 21.34. But that's sort of it. Otherwise, it's going down here, and that's ugly. Although that is the long-term support, so that should show some life if it hasn't bounced before that.
Yeah, and if it does get down there, looking at your stuff, and it starts to get back above it, I mean, that could be a low to play off of for a period of time. I mean, we'll have to wait and see. But, you know, like we said kind of earlier, it looks like some things need to wash out, because everything that I look at, even through your stuff and my stuff, I'm just not in a lot right now. Let's go to Bitcoin and Ethereum. We'll do Bitcoin first. Ethereum I bought the other day. I'm curious to see what it looks like right now. I'm actually going to I'm always in ETH though, so to me it's a little different.
So I did not pull up the Ethereum chart. I just have Bitcoin up so far.
Okay.
So, but yeah, for me, this was sort of a breakdown when we got below this neckline, and we came back and retested it. Still didn't close back above it. Even retested it again. So for me, I think the price target is 35,676. That's my ambulance line. Now, if it does hit that and it's within the confines of this channel, it's not a bull flag anymore, because it's too long to have been a bull flag. But there will be a measured move if it ever gets above this channel line of whatever this distance is from top to bottom. So for now, I'm looking for it to hit about here, unless it breaks back above this slope, and then I will recalculate.
Yeah, that's one thing why I look at your analysis. I look at Trader SZ's. You guys, one thing I like about both of you is that you're always giving the two possible scenarios. You're not just living on the one. You say, look, this may happen, and if this happens, this is what we're looking at. But if this doesn't happen, this is what could happen this way. And I think that's important. So you're always looking at the one direction, but you won't fight it either way, right? I mean, once they prove it to you, that's the way you're in.
Right. For me, this is much higher probability for now. But if it closes above this line, then I'll just have to change my mind, at least temporarily, unless it fakey breakies. But yeah.
Yeah. So you don't have an ETH chart? Because if a couple people wanted to see ETH, I do too, but if not, no big deal.
Let me look.
You got Ethereum is becoming as strong of a following, if not stronger, than Bitcoin, in my opinion. I mean, I mostly only look at ETH. That's all I trade.
So I have not adjusted this since here because I forgot to do it in my last videos. I actually don't trade it. So we'll see how good my lines are. They're like really good, right? Look at this. A+.
This is why you say you leave them on there, right? You come back, you look, and you see like kind of what's shaking out. Yeah.
A+ for me. I haven't adjusted it since way before. Yeah. So for me, it's below this key line of 2960.78. It looks like it back tested it not once, but twice. And, I guess, let me look.
I'm looking at my ETH stuff right now. It's failing. I have 3146 as a big daily pivot for me. It's hit it like multiple days. It can't get above it.
Yeah. So the thing that worries me most about this chart is this bottoming action is what I prefer to see is, this looks like support, right? Like it's hit it multiple times. This is why I talk about triple bottoms, not a bottom. This is a quadruple, not a bottom, but, or I don't know, it could be, but for me, this is support, obviously, because like the wick's bouncing off of this line here. But if it was a real bottom, I would have preferred to see just a singular wick, kind of like this one, and then more, not getting below this level again, which was 1923 or so. So this does not look bottomy to me. This just looks like support, which implies that we'll go at some time to test it or below it. So let me look here. Again, I wouldn't know, but
I look at your chart and it looks similar to mine too right now, as much as I am bullish on Ethereum for other reasons besides technicals. It doesn't look good right now in the chart. It's not acting very well.
No, but you know what? There's an interim support here. So potentially before this goes, it could come back and down. If it stays below the key, does not close back above it from here, I would imagine that it's at least going to go to here first and then potentially bounce. And then somewhere around here. And then, if it bounces there, then, and it really needs to get back above this key level though. But if it bounces here, then we'll see what happens. Really, I had said sort of below this slope is no bueno. But it has another chance, and then we'll see. This would be really no bueno.
Now, I'll be following your weekly stuff to see what pans out here over time. We got 2 more markets to go today, and everyone wants to see natty gas as well. But let's do crude oil first, and then we'll add on natty.
Okie dokie.
Yeah, crude oil I'm interested in too because it's on my stuff. I'm going to see what you see.
Oh, good. I had reshorted 75, so yay for me. Okay, so this is interesting, right? This is the main weekly chart, which, I don't necessarily always take trades off of, but like I really do like it. And, we have something similar actually to that gold thing where that we had that weird wick where, where it went negative. So potentially I was looking at this being, this is the weekly time frame, this being a ginormous head and inverse head and shoulders. But for that to remain true, it cannot close back above this neckline of 76.9. And boy, did it come close, but that was quite the rejection. So for this week, I'm actually looking for, because we've had such a rip in oil, I'm looking for a little bit of a back test. And I would like it to, I would like it. My thought process is that it's going to be red for the week. So it has some to go still. But so I've just been shorting pops because my thought process is that it will be red for the week. So Yeah, that's what I've been doing.
So this is the intraday one. This is what, not
Or
a scalp per se. Oh,
well,
this, no, but I'm saying,
but,
so you're holding this like as a swing.
right now, yes, right now I've actually got it in both accounts as a swing, because
Got
when I saw it reject there, I added to the investment. But yeah, so I had gone ahead and put in this gap because we had opened here and then gone straight up. So I covered some of my short when we got to the gap here, and then, like I said, reshorted this morning after the report. So that was good.
All right, last one for today, natty gas.
Oh boy.
We got so many experts out there now, Julia, right? Everyone knows about the fundamentals of natural gas and everything right now. I turn on natural gas Twitter, and or not that I turn it on specifically, but you see so much talk about it. Not a market I trade. This thing has not been the easiest market. It's a hard market, I think.
This is like trading silver versus gold.
It's really is.
It's a lot harder.
It's hard, man. I don't touch it.
Yeah, no, I had expected it to go to 6 for quite a while. I do think it's going to cool down a bit here. I don't know how far down it's going to get, but I do expect it to cool down a bit. And I mean, you can see the volume candle there on that toppy looking candle is indicative, I think, of some short-term downwards action. And then also there's some RSI divergence here, but I'm actually not messing with it right now because I want to wait till I'm back. I'm not the best momentum trader in the world. I might take a short and just kind of, I'm not good at that. So I might take a little bit of a short, like tiny short, and just kind of hold it here for a little bit. But just because of this insane, I mean, I think I started talking about the breakout here, and then it just this has just been insane. So I don't want to get on the wrong side of this, either direction, actually. So I'm just kind of wait and see for me, and maybe it'll be something worth buying if it gets for here. You can see I talked about this on YouTube. So, this is what I was talking about by too cute, because I bought the 20 MA when it came down here, and then it bounced immediately. And I was like, can it be that simple? Am I going to be rich? And then I thought, no, it's not that simple. So I just went ahead and put, I don't know if it was a break-even stop or slightly above. I mean, like $5. I don't know. It was not a lot, but I put a stop in right here. And then the next day I was feeling pretty good about it because it looked kind of wonky. And then it just ripped, and I was like, oh, what was I doing? I couldn't even put the stop just a little bit below where I bought it, just a touch. But anyway, so it sort of screwed me, but I don't have FOMO there because I did get a lot. I got a lot of this. So for me, I've actually made the most money this year off of natural gas versus anything else. I'm not looking to lose it. Sometimes I just try not to lose money. So I just don't want to mess it up.
And especially when you get something like this, I'm looking at these candles, and I look at that and I say, it becomes very difficult to manage risk in here now. Yeah. I talked a little bit about this on the position sizing. For me, natural gas is the market I trade, but when I see a market like this, there's obviously also, because it's a energy market, there's some fundamentals behind this. Not some. This obviously has, I'm assuming, a lot. I haven't followed much of it because, like I said, I don't trade it. But this is a tough scenario to trade when you have this much volatility in something, because you can't manage risk. You got to really know what you're looking at. The best natural gas traders I've met in my career, coming from a floor background, have always been spreaders, because when you start to get moves like this, they'll lay stuff off. They're not just trading the outright. The outright to me is when it gets like this. We've seen it in oil. I mean, look at oil when it had that break. I was like, man, I want to buy this with every bone in my body. I'm like, but I can't manage risk here. Where am I wrong? Who knew it was negative, $37? Yeah. It's like, you don't know what these things could do. And this is when you get into commodities, it's just a whole nother animal here.
Yeah, this actually does look like it's going to bounce at least interim midday, and then probably do a little something up here to make people get crazy and then come down.
Yeah. Well, Julia, I got to tell you, I always have so much fun chatting with you. I thank you so much for taking the time. You spent over an hour with all of us today. You answered all everyone's questions. You're great about that. I mentioned at the beginning of the show, everyone should follow you on Twitter. You're so much fun on Twitter. You're educational and entertaining, which is really, a breath of fresh air on Twitter. Some people are really none of either. But I think that people should follow you at Cordova Trades. Tell us a little bit about your YouTube channel as well.
Oh yeah, no, I have a YouTube channel where I just it's free. It's just mostly for me, where I just sort of talk about my weekly plans each week, and that's pretty much it.
Yeah, everybody, definitely check it out. She gives a ton back to the community. And look at today, she spent a ton of time with us. So hit that like button if you're watching this on YouTube. Share it on Twitter so everyone could go back and watch Julia and I. This will be recorded. It's on all of the audio channels. And all of you, thank you again for tuning in for another live stream of Futures Radio Show. Like I said, it was a blast, Julia. Thank you again. Looking forward to doing this again. I can't wait to have you back. We got more stuff to talk about.
Thank you for having me. I really appreciate it.
All right, everybody. See you next week. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.